very good afternoon to you traders. Mark here from the day trading room. Time's approaching 3 o'clock in the afternoon London time. Just watching the markets plodding to the upside. Reasonable chug on here, just about to tag the overnight high. But really the purpose of this video is I want to talk about stop losses. I get a lot of questions about stop losses, and understandably, because it's a bit of a fine art. If you put the stop too far away, you're giving a lot back to the market for a trade that is wrong. If you are putting them too close, then you're going to get wicked out on noise. You know, a little bit of adverse market movement, you're not letting the trade breathe, and noise is going to stop you out. So not doing it too wide that's costing you a lot every time you get stopped out, and you don't want it too tight that the slightest little bit of noise wicks you out of a good trade. So how do we decide excuse me, where to put your stop? Now I'm going to talk through the Dow. I use different stop sizes for different markets. Crude oil a lot different to the Dow, and for example, if you're trading a stock like Apple, you're not going to be using the same sort of stop as you do as trading the Dow. So we're just going to run through the Dow and how I've come about my stop, where I put my stop, and just generally how I manage the risk in terms of stops. So for me in the Dow, I use a 10 to 15 point stop. Now this may be adjusted as we've actually gone through a period of low volatility now, and I'm just doing a bit of number crunching and looking back through my trades to see if I can reduce that slightly, and I think I can. But we'll talk about what it is at the moment, and it's a 10 to 15 point stop. Now you may say, well, why is it 10 to 15? Why have you got that flexibility? Well, a lot of people will say to you, you've got to have fixed rules, and I agree with that. I do agree with that completely. But at the same time, what you don't want to do is you don't want to remove the trader's gut from your decision-making process completely, because when we are not clouded with emotion, whether that's frustration, fear, greed, anger, all the things that we can feel as traders if we're not careful, if we're not in touch with our emotional thermometer, then our trader's gut actually is one of the very best things we have. You know, the more screen time we put in, the more screen hours we put in, the more fine-tuned our trader's gut is. And so, you know, it's a difficult thing to quantify, and it's not something you're going to see in textbooks. It's not something you're going to see many people talk about, but I would urge you to rely on it and trust its judgment. But at the same time, a little caveat to that is to say, just make sure that you have your finger on the pulse of your emotional thermometer, so that your trading gut is not making decisions based on its emotion. Because we're all humans at the end of the day, and if we have fear, we're going to make a decision based on the fear. If we have greed, too much greed in our emotion, we're going to make a decision based on that. So be sure you're making the decision and that you're analysing your trade in the market from a neutral perspective and from the true trader's perspective, not clouded with emotion. But saying that, I do think that you have to give yourself a little bit of flexibility as a trader, because the market is not black and white, which is why I use what I call a range stop. It's 10 to 15 point stop. So what happens then? So I'll place my trade, and if the market goes against me 10 points, 10 ticks on the Dow, I will assess the trade. Now I'll be constantly assessing it earlier than that, but more strictly and more in terms of looking to get out at 10 ticks movement against me. So to get 10 ticks movement against me, I will look at the tape, I'll look at everything, I'll take a little look and say, if this is okay, is the trade still okay? How's the tape looking? How are the levels looking? Is the level holding that I'm looking for? Am I getting the continuation I wanted? Is this just a little bit more of a pullback than I was expecting? Have we dipped under a level that really negates the trade now? So from that point, from the minus 10 ticks through to the minus 14 ticks, I'm looking, I'm assessing. If I take the trade and it looks awful, I think I'm completely wrong, 10 ticks, I'll take the trade off. I'll take it off myself manually. I will leave it. I'll close it, should I say. If, however, I think it's okay, I've just maybe slightly mistimed that tape entry, then I'll hold on to the trade. If the trade goes 15 ticks against me, I cut it. That's where it becomes black and white for me. There's no grey involved. The decision's taken out of my hands. If it's minus 15, bang, I'm out of the trade. done, dusted. I've obviously mistimed it, I've misjudged it, and the trade's not going to work for me. But I've got that little 5 tick leeway. Now, don't forget I'm an active scalper. I'm a short-term day trader, so that time frame and that level of stop suits me, and that's why I use the 10 to 15 ticks. And I'll go into a little bit more detail in a minute how I arrived at that level also. But to see the difference there gives me the flexibility. It goes to 10 ticks. I'm going to start looking at it, thinking, just reassessing the situation. Is it a slight mistime? If that's fine, then I've got my five more ticks of breathing room. If it looking bad and I've completely misjudged it, and it's just wrong, and that often will happen if perhaps you're fading a flush point. You've got a flush point, you're in. The market pulls back a little bit, then comes lower than the flush point, and that's your 10 ticks. You probably don't want it, because the point of it being a flush is it's an emotional order and you're looking to take the other side of it. So I've got a little bit of leeway, but of course when it goes to minus 15 ticks, that's when the rule kicks in and there's no leeway. It's black and white. I'm out of the trade, stopped out of the trade. So how did I come about that 10 to 15 ticks? Now this is something that you can do and go away yourself and look at. And as I say, I'm going to tighten that up slightly now because the volatility of the market has decreased. I'm finding it's more like 8 to 12 ticks, 8 to 13, 7 to 13, something like that at the moment. But I'm going to quantify it a little bit in the next week or so. But how do I do that? How do I come across the 10 to 15 ticks? So what I did is it takes quite a long time to do, but it really is worth doing. If you've got the time, well, I would say, I would say do it. Not if you've got the time to do it. I'd say make time to do it personally, because one of the things that I did years ago was, and this really sort of took me a bit more of a leap forward in my trading, gave me more confidence to hold trades, gave me more confidence to know that the stop I was using wasn't just an arbitrary stop. Now what I would do is I would look through all my trades, I'd look through the trade, and also I would note down. If you can't look through your old trades, then make a point of noting down these parameters, if you like, as you're taking the trade. So as you're taking the trade, how much heat does the trade take? Okay, how much? In other words, how far does the trade go against you before it goes in your direction if it's a profitable trade? Okay, and secondly, if the trade goes against you and stops you out, how much further does that trade go? So if it stops you out at 10 ticks and then goes a further 20 ticks, write that down. And for a winning trade, if it comes back 5 ticks and then goes your way, 20 ticks, jot that down. But what that's going to give you is a decent understanding of how accurate your entry is relative to the trade that you're taking. If you're taking a pullback trade, a flush trade, whatever. Now you may find you might have to adjust the stops depending on the trade type. If you're looking to buy sort of deeper pullback, you may find sometimes you take a little bit more heat than normal. That's up to you to adjust your position sizing, your stop sizing to suit. But once you've started analysing your trades and you've started understanding what's actually happening after you take the trade, because quite often we don't have that. We don't have that information. We have a lot of information on price. We can get that from our TradeStation, our Ninja, whichever platform we're using, quite easily. But we don't really have a lot of information about our trade, our trading. In specific terms, in this example of how the trade, what happens to the price once we've taken the trade. And what happens is you'll start to get a bit of a picture there. You'll start to say, okay, well actually, if the market then goes 10 ticks against me, the likelihood is it's going to go 20 ticks against me. Or if it goes 6 ticks against me, the likelihood is it's only going to go 6 to 7 ticks against me, and then it goes in my direction. That's what happens on my winning trades. And my losing trades, if I'm wrong, really I'm wrong. If it goes 10 ticks, I'm really wrong. So that's how I got my information. I looked back at my trades and I thought, hey, you know what? A lot of the time I would take a little bit of heat, 6 or 7 ticks of heat, and the market would then go in my direction and I'd push off nicely. And sometimes if I got it wrong, really, the sort of level was if it went more than 10 ticks against me, then I was wrong, and I was likely to be wrong by a lot more. So it made no sense then to have a larger stop. So then you get a point where you go, okay, well, I've got the information now. I sort of know that if I'm right on the trade, the most heat I'll take is sort of 6 to 8 ticks, whatever that figure may be. You can then put your stop a couple of ticks, behind that and say, okay, well, 10 ticks, I'm out of the trade. And then if you want to put that range in like I've done and say 10 to 15, just to allow yourself a little bit of flexibility based on uh, market conditions without having to adjust that stop every single day. You can revisit that every couple of months, or when the market changes its rhythm and then its pace, if you like. But then you trust the stop. There's a lot to be said about taking a trade and knowing that if you're wrong, the stop will protect you, and the stop is going to protect you because the likelihood is that that trade is wrong because you've done the back. I don't like the word back testing, but you've done the analysis on your trading. So that's how I use the stops. That's how I use stops specifically in the Dow, and that's how I came about that figure. Now, obviously, you have got some scenarios where the stop is going to be at a level below a key point, but I would say the majority of the time, guys, if you're using that, for example, the 10 to 15 for me, as I say, I'm going to tighten up slightly because I think that tape reading it, you can really pinpoint that entry, and we've got a little bit less volatility now, so it's a little bit wider. But the point is, often, if you're getting to a point where the max stop is 15, you're looking to take the trade, and that stop is going to be not a very good position. Perhaps you're taking a double bottom type trade, and the market's coming back down to retest, and it's sort of 15 ticks away from that low. Just wait a little bit more, and if you miss it, you miss it, because you do still want your stop in a sensible level. There's no point in being stopped out as it's retesting a key level. So you have to use a little bit of common sense and say, okay, well, if I have my 15 tick max, it's going to be in a zone where I still want the trade from a chart point of view. If you see that, then just wait. You have to pass on a few trades. That's just the way it is. You can't have every trade possible. And a prediction, is not an edge. The edge is waiting for that trigger, waiting for that entry based on what you feel the market's going to do, where you think your target of the market is going to be. So just a little idea on how to set stops, and perhaps you can go away and maybe do some analysis on your own trades depending on the market. Different markets, as I say, different movements. You try to use a 15 tick stop on Apple, forget it. Crude oil as well, a little bit wider stop required on that, a little bit less stop maybe on the ES. So lots of things to think about there. And the other thing I wanted to mention, I've been trading a lot of crude oil at the moment. Pretty good. I'm really careful with my trades, just literally picking the very, very best trades. 1 to 2 trades a day on crude oil, even though there are a lot of let me bring the crude oil chart in. There are a lot of good setups coming. Obviously we don't need the ticks with crude oil, it's no use to anybody. A lot of good setups coming with crude oil. A couple of times in the afternoons I've been waiting for what's looked like a really good morning. Like, I think this was on Thursday. We had a really good morning, strong, and it was holding, and I was waiting for some sort of extra drive in the afternoon to maybe target the 109. Didn't get it, so I've had to sit on my hands a little bit. And a similar thing yesterday. I had a bit of a late drive in the afternoon, thought it might flag and push up higher, and then the sort of volumes drifted off. So that's anything I'm just being cautious for. Generally taking my trades straight away in the morning, looking for that flush through the whole number, the key level, fading after a little bit of stretched movement, and then taking the trade from that, and then just seeing if there's action in the afternoon. I'll take it, but quite often it's sort of tailing off. One thing also I wanted to mention, guys, is really excited. I'm really excited about this. I've got a new program coming out. Okay, and I've got a tape reading program already out there. Now this is going to be bigger, and it's going to be in a modular format. It's basically all the pieces of the puzzle, of the trading puzzle, they're going to be put together to complete the jigsaw. It's going to be everything. So I'm excited about this because I know that this is going to really help a lot of you out there. If you're struggling, if you're still struggling to get profitable, the consistency, these modules and these programs are just address everything that you need. And every problem and hurdle that you face as a trader, and that I've faced. I'm just putting everything down into video format, and I've got it's really good. It's going to be a couple of weeks. I'm just finishing the final touches to it. I don't want to say too much about it, but I just want to say, looking forward to that. To keep an eye out on that. Really, in a nutshell, we're going to have all my trading setups and strategies. So every single strategy that I use in detail. So your entry, your exit, where your target for the trade, when to take the trade. Important. They're all grouped. All the strategies are grouped, so they're ranked, they're graded, and they're grouped into market types. So all you got to do is look. What's the market type? Great. Now look at the list of setups to use in this market type. Pick the one you want. Look for the entry. Bang. Take the trade. vice versa. It's just it's a really good way of sort of grouping everything and ranking everything. It's gonna be really good. The other thing, trading mindset. Now, this is not the usual theory of you've got to stick to your rules, got to be disciplined. We know that. The thing that most people have a problem with, and I did too, is how you overcome a problem. Now, there's two, basically, attacking this in two ways. We've got to identify the problem and then rectify the problem. So often the problem isn't what you think it is. You may say, oh, I'm breaking my rules, or I'm having little spells of greatness, and then I'm losing it all on a couple of good trades, or I just can't seem to get over pulling a trigger, or I don't take a stop, or I'm taking too many stops. Fine, we'll get that. Going to cover all of that and identify how to identify the problem and solutions for that problem. Because quite often I've come across problems where I just feel like you're banging your head against a brick wall, can't get through. But if you step back and if you just dedicate your time to solving that solution using these ideas that I'm going to put in this module, then you get through it, get past it, forget about it, move on, get your trading to the next level. Because I know a lot of you are so close to becoming profitable, so close to being at the trading level you want to be, but it's just eluding you. You just can't get it for whatever reason. So that's gonna address that head on. We're going to tackle that. I'm going to get a lot of you straight through this these hurdles you've got and into the trading position you want to be. And finally, the other module that bolts onto this is going to be trading with the probabilities. Something I haven't talked about a lot. I've mentioned it. I've got a couple of blog posts about it in the site. You can probably go and find those. I'm not sure what you'd have to put into search for them, but we're going to talk about knowing your market. Do you know what the probability of hitting the overnight high or low is? If you don't, you should do. Do you know the probability of filling the gap, upside, downside? Do you know what the likely first 15-minute move in your specific market is, whether that's the YM, ES, crude oil? No. This is going to address that. This is going to be talking about how we use this data. I'll give you the data, we've got, and then how to use that, so that then you've got everything, and then combined with the existing tape reading program, you've got all these modules together, and it's just going to be one complete guide. Doesn't give it justice, but manual doesn't give it justice either, but it's going to be just every corner or every piece of the jigsaw, every foundation block that you need to progress to the next level in trading. Okay, so make sure you've signed up to my email list here if you haven't already, because when it's ready, and it's not quite done, but I want to put finishing touches to it. I've got a few more things to add. I want to make this just so comprehensive. I've got 11 years of just information in there that I'm just trying to put across and get out on those videos and get it all so that you guys can shorten that learning curve and get to the place you want to be. So it hopefully a couple of weeks, maybe a little bit longer. Don't want to rush it, want to make it perfect. But get on my email list if you're not already, because I will be launching it only to the people on my email list. So thank you. First of all, with a nice little bonus just for the email list traders, and then afterwards, after a couple of weeks down the line, it will be on the site for anybody, but without the little special bonus, and that will be worth it. I'm probably going to do it just for the first. We'll see how many. We'll see on the logistics of that. Just want to work out the logistics of it first, make sure that I can do it. But I'm really hoping to offer a nice bonus to give the people who are committed to trading and who want to make this their living, real head start in it. So look out for that. I'll keep you posted on the videos and in the email, and really looking forward to that. So hope the little ideas on stops has been of interest. As I say, the market Dow pretty quiet. It's just sort of the continuations aren't there so much. We're getting those VWAP extensions and retracements. Crude oil offering a lot of opportunities, and a few opportunities in some specific stocks. But we'll go into those in another video. I just wanted to cover the stops. I wanted to tell you about these new programs and modules that are coming out soon, and looking forward to that. And really think you'll get a lot of benefit from it. So take care, guys. Good trading. Speak to you soon.